Welcome to the end of day review for Monday, the 12th of February 2024. Starting off with the economic calendar, what we can see is there was one dreadful news event, being Bank of England governor speaking. However, his speech was 2 hours after the end of the trading session and thus doesn't really impact any of our trading decisions for the day. And thus we simply follow the technical analysis. So having said that, let's move on to the charts and unpack what has happened from a daily perspective. We can see that there's no consecutive candles to suggest a daily bias. However, we can confirm that the bearish leg is at play and the pro-trend move will be too short. In terms of understanding what has happened recently in terms of the PA, well, we were in the ERL continuation momentum scenario. However, the pullback phase was subsequently validated as a result of a body break of this pro-trend shock level right here. As a result, the pullback phase primary leg was validated and we had multiple pullback phase primary leg OPs, this being one, this being another, and then obviously the extreme situated right here, which I haven't yet marked up, as it's not quite relevant yet. However, at the same time, what we can see is that while there isn't any pro-trend unmitigated OPs to support what this reaction is coming off, we can see that it actually did break this 4H primary pullback OB, and as a result of that, the secondary leg was validated. Sorry, the pro-trend primary leg was validated. Thus, we have reasons to both long and shorts because the pullback phase, which is the counter trend move longs, did not yet complete its objective of reaching at least the pro-trend extreme, and then at the same time the pro-trend primary leg with the objective of taking out the external range liquidity was recently validated. However, in terms of trading, we need to understand from a mid-time frame perspective what legs are at play as a result of interacting between these two 4H OBs supporting different directions. And as a result of that, let's move on to the 5 minute where we can elaborate a bit further. Essentially, coming into the Frankfurt session, we know that we had this reaction to the window of imbalance, which then created this pullback phase secondary leg right here. And this pullback phase secondary leg was then extended into the pullback phase primary leg right here, because as you can see, this last week, large week was forming, but we also got a body break right there. So essentially, we've got a pullback phase primary leg validated. So this becomes your secondary primary leg. Secondary leg turned primary leg. However, let's unpack what we were expecting at Frankfurt again. So the latest information was that we had this change of character validating a secondary pro-trend primary leg, a pro-trend leg being created as a result of the pro-trend 4HOB reaction. You can see we reacted higher than the last reaction point, validating this. Since this is the latest secondary leg information, it essentially overrides the secondary leg right here. And as a result of that, we were looking for shorts, provided that the age of the day was validated. Unfortunately, what you can then see is that Frankfurt put in the high of the day at 9:55 a.m., 5 minutes before the London session opens, which then was subsequently which then meant that the pre-Asia low of the day was validated to be holding, and thus was expected to hold where the long move based on this at the secondary leg turned primary was expected to play out with the objective of reaching somewhere in and around this area. However, as you can see, price came down and invalidated this area, which then resulted in the creation of a new secondary pro-trend OP and enabled us to consider taking some short entries. Um, so as a result, I took one loss right here, and then I was open to taking shorts to play the pro-trend move to the downside. However, price at no point retraced significantly enough to enable me to get into any trades, which is fine. And as we approached the end of the session, I considered closing this limit order that I had on, because I knew that when When the Bank of England governor begins speaking, it will likely be volatility, and I don't know if it will necessarily play out. So, having said all of that, I actually didn't take this trade, but you can see it probably may have played out. But the issue with this was you've got a significant large stop loss, and whilst this has the potential to be the high of the week, the risk just didn't outweigh the rewards, as it was near impossible to get to a reasonable break-even point before we, yeah, before the session ends. So, having said all of that, that's pretty much the end of day review. One loss. So currently sitting in a two-loss streak for February, which is fine and part of the probabilistic model. And we'll chat again for the London outlook tomorrow.